This is Chuck Kowalski with Commodity Street Journal. Hi, this is Chuck Kowalski with Commodity Street Journal. In this segment, I want to cover the upcoming spring planting season for the grain markets, namely corn and soybeans. At the end of March, we got the stocks report, grain stocks report out from the USDA. It showed a little bit higher than expected supplies on soybeans and very high on corn. Planting intentions report is basically confirming that farmers are going to plant a lot of corn and soybeans this year. So we were coming into it earlier in this year where we were expecting supplies to be very tight all the way through the summertime, but now it looks like that picture might have changed as the stocks are a little bit higher than expected. So now we're looking at what the farmers are going to plant and how the growing season is going to go. The same type of scenario that we saw last year where the supplies were tight coming into the growing season. We planted a lot of crops, they got in the ground just fine, but then the weather issues came up around May and June timeframe. So if we don't get that this year, if there's no weather problems, we're going to plant a lot of crops, we should have good yields, supplies are not as tight as expected, so we could see corn and soybeans get back to more normal type of price levels. With corn, December corn still well above $5, that could actually be trading in the threes if everything goes well this year for the crops. And soybeans, November beans are right around $10. We could see those, come back more into the $7, $8 range if the crops come through pretty well this year. So really, when you trade in the markets, you want to err on the side of probabilities. What are the probabilities? Normally, you'll have a good growing season and trend yields. And if we do have trend yields this year, we're probably going to have very good crops, and we'll have plenty of corn and soybeans. There won't be supply issues, and prices should tend to go lower from the springtime when they get them in the ground all the way through till harvest time. Some people like to trade from the surprise side where they're expecting weather problems. That sometimes pays off, but most of the time it doesn't. We've had a couple years in a row where we've had growing problems with the weather. Whether we have another year in a row of the same type of problems, the probabilities are probably a little bit lower on that. So when you're going from a trading perspective, you want to play the probabilities, and the probabilities say that the markets should trend lower, we should get the crops in the ground, and we should have trend yields. So that's really the way I'm approaching it, and rallies are probably meant to be sold. We'll probably have some minor weather issues come up, and those will probably be good selling opportunities, and a lot of the hedgers are probably going to be looking to lock in their yields, their prices at those levels. So that's what we're seeing. Anything can happen, but those are the probabilities, and that's probably the way most people are going to trade the markets this coming summer. So we'll keep you updated throughout the season. Until we talk next time, this is Chuck Kowalski with Commodity Street Journal.